Hi, this is Mani from bsc to nsc.com. So in this video we're going to see what is some of the important basics that a beginner should learn who's interested in trading in commodities like gold, silver, natural gas or crude oil. So when it comes to commodity, there's no fundamental analysis to be done like earnings per share or profits and so on. It's just technical indicators alone and technical analysis alone. Candlestick analysis, Bollinger Bands, RSI, and among these Bollinger Bands is pretty simple. I'll be explaining the charts, and RSI or stochastic is a momentum based indicator which will help you track the high momentum on the upside and the downside. So when it comes to candlestick, learning the candlestick, you need to understand what is the body of a candlestick, the high price in the candlestick, the low price and the close price. And one candlestick represents the intraday movement or the movement which happens within that particular time frame. For example, if it's a 5-minute candlestick, what is the movement that's happening in the 5-minute period? But it doesn't take into account the gap up or gap down movement that happens overnight or between one time frame to another time frame. And then the most important part in candlestick is to identify a doji. A doji is a candlestick wherein the open and close price are pretty much the same, or in other words, the body of the candle will be very small compared to the entire length of the candle. So I would pretty much say anything the body should be less than 15% of the entire length of the candle. So I would define a doji like that. And a simple trend analysis is to watch for dojis, and then so basically when the open and close price is pretty much the same and very less when compared to the entire length of the candle, it means that in that time frame the buyers nor the sellers won, wherein the script goes up, goes down, but ends up at the same place where it opened. So it was an indecisive candle, or a candle where buyers or sellers did not pick a particular direction. It was just consolidating, or you can call it a consolidating candle. So pretty much whenever it's consolidating, whenever the gold or silver or whatever commodity it is, once it is consolidating, and then further if it picks a particular direction, upside or downside, an uptick or a downtick, you can take that particular trend and expect that particular trend to continue for subsequent candles. So that is a simple analysis. Then I'm going to show you how you can use this. Okay, so before we proceed further, I like to show you the some of the basic candles and sample candles and how you can understand what these are. So the first two candles have marked the high as H, O as open, C as close, L as the low point of the candle, right? So you can see that here the entire length of the candle and the stick formation and then the body formation. So if the close price is lesser than the open price, then the candle will be shaded in dark or in red, indicating it was a negative candle, and the low price and the high price, and this is a positive. This is an example of a positive candle wherein the close price is greater than the open price, and there's a high and there's a low in the time frame. This means that the buyers won in this particular time frame, and it is a strong uptick. And this is a downtick but not a strong downtick, and this again is a negative tick. And let me show you what is the body of the candle. So in this case, this is the body of the candle, or let me draw a similar line here. This length is the body of the candle, that I am drawing in circles. Let me take a thicker line. So this, in this candle, this is the body, and this entire length that you see here is the entire length of the candle, right? So, and here it's a negative tick. This is a candle wherein the for example, when the open and close price are pretty much the same, then you're going to see just a horizontal line here, like in this candle. And here also you can see it opened here and then it closed here. After opening, it has gone down and then again bounced back and again closes at pretty much the same value as the open price in this particular candle. This is an example of a strong negative candle wherein it opens at the high, near the high value, and then sees strong selling and then closes near the low value. This is a positive candle but not a strong positive candle. So among all these candles, I would define a doji as only these two candles where I'm marking the entire candle with a circle. These two are dojis or indecisive candles wherein neither the buyer nor the seller won, or wherein the markets are still, or the commodity is still waiting for a trend to be picked up. So I'll show that in the gold and silver chart coming up next. So let's take the example of the gold chart, and I'm going to first show you the daily chart first. And you can see here, this is a gold daily chart, and on the right you can see the values in US dollars. Unfortunately, this is not in Indian rupees, but any of your broker who is giving you a software, you should be able to draw the Bollinger Bands like I've drawn here, and if you can see the candlestick. So a similar analysis is also holds true for when you see the chart in INR, right? So I'm going to try and form dojis wherein all dojis are appearing, and the Bollinger Band I would look at as a resistance or a breakout, and the bottom Bollinger Band as a support level. So here you can see bunch of dojis getting formed. Here I'm gonna take a thicker line. A bunch of dojis getting formed at the left end of the chart. This is on the daily chart, right? And then a strong down tick. So you could have gone short here wherein a bunch of dojis and then a down tick happens here. So you could have gone short here wherein the red line I'm marking here. And then further you can see dojis getting formed here wherein you could have covered your positions. Again you can see a doji getting formed here, one more doji. Let me mark a circle. So here you could have booked profits, whatever you went short here you could have probably booked profits, and a bunch of dojis here followed by a strong negative tick. So you could have again gone short somewhere around here wherein you see strong negative side. Again, right? So you could have again gone short here at these levels. You again see further strong negative downside. Then again a bunch of dojis getting formed here, and you are near the lower Bollinger Band. So you could have booked profits, whatever you went short here you'll be booking profits here, right? So a bunch of dojis and then a strong uptick. So even if you had went long here, you may have had to again the lower Bollinger Band and then doji and then followed by a strong uptick, again a doji here. So you either look to go long in this circle or this circle here, and then while it's pretty much close to the upper band you could have booked profits, right? And then the next set of dojis, you can see a doji here. Let me draw it clearly. A doji here with the green tick, and then the next subsequent trend it just goes short. I mean You can see a downside movement, so you again look to go short somewhere here, and then a bunch of dojis here. I'm going to mark that in black. A bunch of dojis here, right? Then one more doji here, and then a strong uptick. So here you should ideally look to go long. Let me draw a horizontal line, green line here, right? Because you have bunch of dojis here, bunch of dojis, and then a strong uptick. So you definitely look to go long in these zones. And then again you see a doji here, and then it's hitting the upper band also. If you get the upper band, you should have sold off, because you had a doji and then an upper band also. So again a bunch of dojis here and then a strong uptick. So you can again look to go probably a fresh long position here, although it's in the upper band, so you would look for like a quick exit. So somewhere here you should look to go long, because you had a doji here. This will be the stop loss and a strong uptick, so you go long here, and then you're getting an upper band here. So upper band you could have probably booked profits on the long position you maintained here, right? And then wait for next doji set of patterns to happen. So you have a strong doji here, mark a circle. You have a doji here, you can see a stick with just a horizontal line, and then a strong uptick again. It moves up. So I'll mark a line where you could have gone long. You could have gone long in these 3 days, and then it just continuously moves up. Even though there's a doji here, and it continuously moves up. And you should wait for next doji. The next doji is still not getting formed, so whenever the next doji is getting formed, you would book profits there, right? So this is how you will trade on a positional basis. This is a daily chart, so you will have substantial amount of time to react. Again, currently we are in the upper band, so if you're basically doing intraday trades, you can probably look at the 60-minute chart. This is a 60-minute chart wherein each candle represents 60 minutes, and you can see at the bottom 18th Feb, 19th Feb, 20th Feb. Unlike the previous chart here that we just saw, unfortunately the dates are not there. This was Jan. This is the last 3-month or 4-month chart, right? And basically right now, since on the daily chart gold is on the upper band, so whenever there is a doji getting formed near the upper band, you can like kind of go short. For example, let's again quickly mark the dojis here. A bunch of dojis here, one more doji here, and then a strong negative tick, so you go short. Let's mark the negative line somewhere here. So you could have gone short here, and then a doji, so you would put a stop loss here and look to book profits, or doji and then followed by a strong negative again. So let's mark one more doji, set of dojis here, a doji and then couple of dojis, and then again a negative tick. So you could have again gone short here, and then one more doji here and book profits probably here, and then two more dojis here, and then a strong uptick. So you could have gone long here, go long. Let's mark, right? So you go long here, and then a bunch of dojis. You can see a bunch of dojis here. So somewhere you can book profits here, whatever you went long here, right? And then a bunch of dojis here again, and then you can see slowly it is trending lower. Bunch of dojis and then a strong negative tick, so you again look to go short here, somewhere here, right? And then let's look for the next set of dojis. I wouldn't call any of these technically as a doji. Here you have a doji and then an uptick. So this was not a great shot. I mean, it still moved down, but not much of a profit making situation here. So a doji and an uptick. So a doji comes, you immediately set a stop loss around this zone and quickly exit off. And then a bunch of dojis here coming down, and then a bunch of dojis here, and then a strong down tick here, you can see. So again, even if you have a doji followed by an uptick, you went long here, and again a doji, so you cover it pretty quickly. So not much more for profit making zones there. So but here a doji and then a strong negative tick, so you go short somewhere here, correct. So some of these dojis may not give you, especially in the intraday, may not give you good profits, but some will give you exceedingly good profits, like here. And then you wait for a bunch of dojis to again get formed, like here, right. So whatever you went short here, you almost try to book profits in this zone, and then it goes up, a doji and then an uptick, so you go long here. So you go somewhere long here, and then a doji here, so you book profits here or whatever you went long. Doji and then a down tick, so you again go short somewhere here. Needs to be in red. So you go short here, and then a doji and a down tick. This again I wouldn't call a doji, but you see some uptick coming up here, so you book profits. And then the next set of dojis actually come out here, and then a doji here. Even though these are not clear signals, again you could have gone short because it's in the upper band and a doji getting formed. So this is how you can look to trade intraday, but I normally prefer to trade based on the daily chart here, like I've shown here, right. So this is for gold and people who want to trade like positional or intraday. So let's now quickly check out the silver chart. So again, this is a silver daily chart, and you can see the fast stochastic at the top. So anywhere like close to 80 or 100 is like on the upper side of the momentum. So let's quickly mark dojis here, right. Again, you can see a doji at the leftmost. The first candle itself is a doji, followed by a strong negative tick. So it's a definite short opportunity here, right. And then a bunch of dojis getting formed, so you could have probably book profits and re-enter again when you see it falling down, right. So a bunch of dojis getting formed here, and then followed by a strong negative tick. So whatever short you went here, you book profits here and again enter into a fresh short when you see a further downside or like further downside movement. And again a bunch of dojis getting formed here, you again book profit somewhere here, and again a strong negative tick, so you again go short here, right. So and then you wait for the next bunch of dojis. Here is a doji, a single doji, and then one more single doji here. So you book profit somewhere here on the short you went here, and then a strong uptick coming, and then a strong uptick coming at the lower Bollinger Band, so you go long here somewhere here, right. And then once it's hitting the upper band, and then there's a doji also coming, so you book profits there. You can see a small doji here at the upper band, so you book profits there, and then a strong negative tick, so you can probably have gone short on that day if you are like closely watching at these level. and then a bunch of dojis here, and then a strong uptick, so you go long here, decide to go long here, and then a small doji, single doji here, so you book profits there whatever you went long here, right? And then a strong doji again here, and then followed by an uptick. But here it's very range bound with a small range, so there's not much of profits or there's not much of upside or downside happening until it breaks out here. So doji is getting formed at the upper band and then a strong downtick, so you go short and quickly book profits on the next doji, and then you watch for dojis again here, but then there's this bunch of dojis here and then a strong downtick, so you go for a short opportunity here. I'm not marking many of these positives and negative areas where you could have gone long and short, but I expect you to like go long here, book profits, short, book profits, long, book profits here, short and book profits here, long and again book profits here, and again here you go short, and then you have a good next set of dojis getting formed at the lower Bollinger band. I'll mark that in black, right? And then a strong uptick, so whatever you went short here you book profits here and enter into a fresh long here, right? Fresh long here, and then a bunch of dojis. You could have decided to book profit somewhere here even if you wanted to, and then a bunch of dojis and then a strong uptick again, so you again go long. Even if you book profits again you go long here, and then a strong upside, and then again you have a strong doji here, so you probably book profits whatever you went long here, and then a doji, and then it's still staying flat, so whichever direction it will next take, either if it comes down, if there is a strong negative tick, you'll enter into a fresh short. So you will again wait for the movement markets to take a particular direction, and then you either go long or go short based on that. So this is how you use this is in silver, and again silver, again you have a 60-minute chart as well. This is what we initially saw was the daily chart. So this is the 60-minute candle. So again, based on where you are in the daily chart, you can like decide whether to go long or go short. And again I'll like quickly mark all the dojis first, right? A bunch of dojis here, right? And then a doji also here, doji here, a bunch of dojis here and on near the upper band, right? Bunch of dojis, bunch of dojis. I mean, it's doji is always at the upper band and the lower band, so here you go short because a doji followed by a negative tick, so you go short somewhere here, then you cover that position here, and since it's at the lower Bollinger band, probably you look for an uptick to come, and you have a strong uptick coming here, so you go long here or even somewhere in the here, right? And then at the upper band you book profits, you see dojis and then slowly trending lower, so you could have gone short again here somewhere here, right? And then book profits here, a bunch of dojis in the indecisive zone. Again whatever you went short you could have booked profits here, and again a bunch of dojis and then slowly trending up, so you could have gone long here. So I'm going to mark a red green line somewhere here, right? Or even somewhere here. In this zone you just book profits, and then whatever you went long here you will again book profits here, bunch of dojis and then a negative downtick, so you go short here, and then bunch of dojis getting formed, so you book profits quickly whatever you went short. You go short in this zone, and then again a bunch of dojis and then uptick, so you go long here in this zone, and then once it's hitting the upper band you again book profits. So this is how you trade intraday based on dojis and the Bollinger band, upper band and lower band. And I think this video has been pretty long, so subscribe to our YouTube channel for more videos, and we'll try to cover more interesting trading strategies. I'm also an authorized person for Zerodha, so join us at Zerodha, and I'll provide free training for people who are joining through bsc2nse.com. That's it for now. Any questions, any queries, post in this video, and we'll get back to you. Thank you.